The adoption of mainstream AI has been overwhelming, and companies are sprinting to keep up. And if you're curious just how fast it's growing, well, ChatGPT hit 1 million users in 5 days after launch, which is just a little bit faster than Netflix taking 3.5 years. But taking that a step further, ChatGPT only took 2 months to reach 100 million users, where most companies, well, it took several years, including Netflix at 18. But there are some downsides to AI, like the fact that it takes 10 times more energy to query ChatGPT than it does for a simple Google search. This means that energy costs are going to skyrocket, and we need a lot more energy sources than exist today. That's where nuclear energy comes into play, because the newer SMR technology, or small modular reactors, come with added safety and the mobility to be placed most anywhere, and they can be scaled up to meet any desired output, day or night. Plus, they're emission-free, which obviously helps the environment, and the zero-emission goals for all of those large corporations. And it seems like an oxymoron just saying that because we all know that nuclear waste is obviously toxic.
Toxic waste!
Even if it is emission-free. Regardless, we need a lot of constant energy, and we need it yesterday. That's why I'll be reviewing the top 5 nuclear energy ETF to give your portfolio a nice jolt of growth. Do you see what I did there? Jolt of growth.
What an idiot!
And from my point of view, this is comprised of 3 main pillars of nuclear renaissance that's made up of mining of metals like uranium. The second is companies designing and building the small modular reactors. And the third pillar is the energy companies that own the power distribution from these nuclear sites. This video is a follow-up to one that I'd done about a month or 2 back on the top nuclear stock, which I highly recommend you also check out. And if you know me, then you know my routine where I'll share all of the ETFs right now, and then I'll give you my review throughout the video. And it's totally in your court if you simply want to ditch the video right after my list, and especially if you don't want to leave me a like or a subscribe. So right here on my side is all of the ETFs that I plan to cover today. And to make things even easier, I have these and all the ETF that I researched for this video in a spreadsheet down in the description, so you can research them further on your own. Also, at the end of the video, I'll list out how each of these ETF overlap with one another between their holdings, in case you wanted to invest in more than just one of them. And I'll also share my top pick. As a disclaimer, I'll be listing out each of these ETFs in no particular order. So to get started, we have the Virtus Reeves Utilities ETF with the symbol UTES, where it's an actively managed fund that invests primarily in US utility sectors like electricity, gas, and water. Now I realize this is not a 100% nuclear-specific ETF, but it does have a large portion of holdings with companies like Vistra Corp that acquired 4 nuclear plants in 2024, or Next Era Energy that operates 3 nuclear power plants, and essentially most all of these have existing nuclear power plants under their management. And as I mentioned in the beginning, energy companies managing power distribution from nuclear plants is one of the key pillars of growth for this nuclear expansion. The fundamental details of this ETF have it with a beta of a 0.58. Which is well below the market index of a 1, which means that it has much less volatility. In fact, this is the best beta of today's ETFs. Next, it has a dividend of a 1.56%, with an expense ratio of 0.49%, which happens to be the lowest of today's group. And I find that slightly surprising for an actively managed fund, and the volume is pretty low at 96,000. You'll want to take into consideration the volume to ensure that, well, if you want to sell the fund, there's enough demand and movement to offload it so that your funds can become liquid. And when we look at the performance, it's up pretty high year to date at 44.8%, and the 3-year and the 5-year look decent. Given our growth environment, I prefer to have a 5-year return of at least 100% or more, but with this fund having a low beta, it's much less volatile, and that's the trade-off with this type of fund, which we can see when we look at the max drawdown, or the max drop in the fund's performance, which was at a negative 18.2% in 2020. And this is much better than the S&P 500, which saw in 2022 a max drawdown of a negative 23.9%. And of all the funds today, this had the best max drawdown of the group. And if you're curious what analysts think, they have the UTES fund with over 14% upside for the next 12 months. I think that logic dictates that an ETF of utility companies, well, it's going to have a little bit of a stunted growth compared to some of the others, but it does have consistent returns with less volatility and less downside. With this major shift in emission-free energy from nuclear plants, a major consumer of that energy is electric vehicles, where the number of EVs is estimated to nearly triple in the next 5 years. And if you aren't aware, these vehicles use 4 times more copper than traditional cars. And that's where today's sponsor, US Gold Corporation, comes into play, where you shouldn't let the name fool you, because they have a CK project in Wyoming that has significant gold and copper deposits. And this copper is not only used in EVs, but it's also critical to other clean energy producers like wind and solar. Granted, gold is their primary metal to be mined, where gold is up over 27% year to date. But the stock price for US Gold is up over 56%. And analysts project the stock to have over 65% upside for the next 12 months. Not only is gold a great haven during market challenges and a hedge against inflation, but the demand for copper gives US Gold Corporation a strong growth trajectory. If you're interested in learning more about US Gold Corporation, then check out the links down in the description. The next fund is the Global X Uranium ETF, symbol URA, which aims to mirror the performance of the Selective Global Uranium and Nuclear Components Total Return Index. This index tracks global companies involved in the uranium industry, including those in mining, exploration, refining, and manufacturing of nuclear components. When we look at the holdings, its top holder at over 26% is Cameco, which is the world's largest provider of uranium fuel. Most of these companies are tied to mining uranium. As for the fundamentals on this fund, it has a beta of a 1.4, which happens to be the highest and most volatile of the group of funds today. And the dividend is exceptionally high at 5.63% and happens to be the best of the group, and an expense ratio of 0.69%, and the volume is the highest of the group at 1.33 million. In looking at the performance, URA has an okay year to date at 12%, the 3-year at 46.7%, and the 5-year was great at over 222%. And as for the max drawdown, this fund had the worst of the group at a negative 57.6% back in 2015. And for the URA fund, the analysts project over 15% upside for the next year. Let's move on to the next fund of Sprott Uranium Miners ETF, which seeks to replicate the performance of the North Shore Global Uranium Mining Index. This index tracks companies that allocate at least 50% of their assets to uranium-related activities, including mining, exploration, development, production, and physical uranium holdings. At quick glance of the holdings, the top company is Cameco, just like the prior ETF, but at a much smaller percentage. And a key difference in this fund is that the holdings are very specific to the mining and holding of uranium. Based on the 3 pillars that I spoke to, I expect this fund to have the highest 12-month forecast because of all the new small modular reactors that are being designed, and the power plants need to start with the raw resource first. But hey, that's just my early assumption. Let's see how it plays out later. In looking at the fundamentals, the beta is a bit high at 1.34 with a healthy dividend of 2.8%, and the expense ratio is a bit high at 0.75% for being a passive fund. And the volume just is okay at 437,000. Now, when we look at the performance, the URNM fund is pretty bad year to date at negative 2.2%, but the 3-year is decent at over 35%, and the 5-year is the best of the group today at over 305%. Analysts give this fund over 26% upside for the next 12 months. And that makes complete sense to me, since this is all companies tied to that first tier of growth from mining uranium to fuel the source of nuclear expansion. You see what I did there? Fuel the source of expansion. Total dad joke. Now I'll move on to the next fund of Range Nuclear Renaissance Index ETF, which is designed to provide exposure to companies involved in nuclear fuel and energy industry, focusing on all 3 segments of growth that I've already mentioned. Which you can see in looking at the holdings, the top 4 companies are some of the hottest names that you'll see in the nuclear sector, with respect to new technology or the source of the fuel. When I see this list, I instantly assume this is built for growth. So let's start by looking at the basics, where the beta is a 1.26 and happens to be a middle of the pack, but it's the worst of the group with a 0% dividend, which also screams growth to me. And the expense ratio is the worst of the group at a 0.85%. And the volume is also the lowest at 58,000. And that's because this is the newest fund of the group, and it happens to be less than a year old. Now, when we look at performance, it's a short conversation because it's so new, but the growth year to date is the best of the group at over 72%. And every other detail after that just happens to be a big goose egg since it's so new. And analysts are giving it just a little bit of love with over 5.5% upside for the next 12 months. Me personally, I think the forecasts are a little bit conservative because this fund has the top names in its top 10 holdings. But hey, Like everything, we'll find out in a year just how it pans out. Just a quick reminder that at the end of the video, I'll share how each fund overlaps with their holdings. And I'll also share my top pick of which ones I would invest in. The next fund is the VanEck Uranium and Nuclear Energy ETF with the symbol NLR, which replicates the performance of the MVIS Global Uranium and Nuclear Energy Index, which also hits on all three pillars. And taking a quick glance at the holdings, it happens to be pretty similar to a few others, so there's not a whole lot of newness. The basics of the fund are right in the middle with a beta of a 1.01, and it happens to have a healthy dividend of 3.7% and an expense ratio of 0.61%. And the volume is decent at 286,000. And with performance, it's a solid year to date at over 24.9%, 3-year at over 76%, and the 5-year, well, it happens to be over 100%. And in looking at the max drawdown, it was pretty good at a negative 21.9% back in 2019. And analysts give this fund some decent upside at over 13.6% for the next year. Now let's take a moment to look at the overlap in the holdings by fund. And after that, then I'll give you my top picks. The largest percentage overlap is in red between the fund of URNM and URA at over 93%. And the next highest is NLR and URA at 68%. So if you do plan to invest in more than just one of these funds, I highly recommend you stay away from those particular combinations. Now, if you happen to run into me at a brewery and we started talking, first, I'd gladly buy you a drink. Second, I'd probably talk your ear off with some of my crazy stories. Like the time that F-16 blew up right in front of me on the runway. No joke. But getting back on topic, if you were to ask me which two funds I'd invest in, I'd pick the Global X Uranium Fund of URA because it covers all three pillars that I'd spoken about. And I'd probably also pick the Sprott Uranium Miners ETF of URNM because it's the fund that produces the source fuel for all the nuclear power plants to operate. And of course, that's just my opinion, but I highly suggest that you check out my free spreadsheet that's down below so you can research these all on your own. Plus, I have a lot of other nuclear ETF that I didn't even talk about. And as always, thanks so much for watching.